All right, welcome to a very special edition of the Risk Reversal Podcast. Some might call this a market in turmoil edition. That's what we're doing here. I'm Dan Nathan. I'm joined by Danny Moses to my right, Vincent Daniel to my left, and Porter Collins. Those are the Sea Wolf Capital guys. We're going to do a little bit of a rundown of what we're seeing. This is Thursday into the close. It's a little after 3 o'clock here. This is an emergency pod. Let's just be very clear about that, all right? Let's kind of level set here. The S&P is down 4%. The NASDAQ is down 5%. The VIX is trading at 27.5. The equal weight S&P down 4%. Interesting a little bit to me. The 10-year yield, 4.05%. Crude oil just below 67. The U.S. dollar index at about 102. Where do you want to start? Jump ball here, gentlemen. What are we thinking about the news that we got? Much worse than expected, the way the market is taking it here. Let's do it, Porter. What do you got?
Well, thanks for having us on.
Yep.
You know, I've never been in a markets in turmoil podcast. I'm pretty excited about it, honestly. I think usually when we're all together, it's a bearish podcast and the market's on the lows. And so this feels pretty good for me. I actually said to somebody yesterday, this feels a bit like 2008, where you really had no idea what was going on. That's how big of an event it was last night, where it's like, I don't know. We were joking around. So the Nike staff meeting this morning, 10 o'clock in Eugene, Oregon, 1 o'clock here. Hey guys, the stock's down 25%. They said we're going to tariff everything from Vietnam at 45%. Well, what do you guys want to do?
Right. Get them on the phone. Get Vietnam on the phone.
Are you guys, all right, so Vinny, are you surprised that, again, some of these companies did not have more sway with the administration, right? Because we saw no shortage of them line up. This is coming from Election Day all through the transition, because what's going on here on a single stock basis is pretty devastating to kind of Porter's point about a Nike in particular.
I think that's the exact reason for the move, right? Because I think a lot of investors, whether it's institutional or retail, just couldn't possibly believe that the path that we were going to take, which was the 3 standard deviation tariff announcement we got yesterday, was going to be probable. Well, we woke up at 4:30 and we realized it was. And it feels to me that while I think hedge funds moved their feet about 2 or 3 weeks ago, I don't think the long-only community moved their feet, and I don't think the retail community moved their feet, and mainly because they probably said, well, there's no way he's going to go through with like this, right? Or, yeah, he's going to announce the tariffs, it'll be reciprocal tariffs, but at the same time, we're going to have TikTok coming to the United States or BYD coming to the United States, so we're seeing the beginning of the end of the light of the tunnel. Now we don't have that, right? And so as a result, all you have is uncertainty, and we all know that markets hate uncertainty. So even though this was known, I just think we took the worst path, and hence the day.
So Danny, Guy's been saying for about a week or two, it's the chaos is the issue. Like, this is what they want to kind of create, or Trump in particular. We saw that in Trump 1.0. You're not buying that.
No, I mean, listen, they're breaking things, right? So the whole idea of finding waste and fraud in the government and getting rid of it, of course, makes sense, but you do it the right way. You don't just go in and, wreck everything in sight. Same way with this. So we want to bring jobs and companies back to the U.S. and send them to bring jobs and reshore them back here. Great. That's been kind of an ongoing plan. You can't just undo multi-generational capital plans in a day and do that. But the worst part about it is that the math behind it makes no sense. So of all that being said, whether it's whatever the tariff number would be, there's people that are saying, we'll get through this. But understand that the math doesn't work. So for people out there that aren't paying attention, just looking at numbers up on a board, they took the trade deficit with a particular partner or country and used the amount that they buy from us and did a percentage basis on it. On ChatGPT, it appears, because all 4 large language models came out with the same exact numbers of what you saw up on the screen, 92%, 66%. So nothing went into this. And the fact that Scott Bessent said, I really wasn't involved in the process, he's out touting the fact that, look, 10-year yields are back to 4%. Well, yields dropping for the wrong reasons is the worst kind of drop, because credit spreads are widening. Credit spreads are blowing out. This is a financialized economy. It's been a financialized economy since 2008, since we saw the blow up. And now you can't just unwind that. So deep breath. I think these things will be undone. However, to a degree, I think the damage, though, from a trustworthiness as a partner, the U.S., at least for the time period, is damaged. So I think we're looking at a permanent, well, temporarily permanent, it'll feel permanent, impairment in the valuation of what people are willing to pay for the U.S. stock market. And I think we're sitting here at 21 times 2025 earnings still here. We know it's probably 22 times because we know numbers are probably coming down another 5%. So looking at it holistically, yes, you can buy things that maybe aren't impacted by any of this, some of these names, and just buy some good stuff. I'm not saying you should pile into the short here because I believe cooler heads at some point will prevail.
Porter, you just mentioned it reminds you a bit of 2008. I suspect you're not talking about actually the reasons for the decline in 2008. But when somebody hears that, especially when they hear it from you guys, they're going to pay attention a little bit. So give us some of the similarities here, because for instance, the S&P is, one more day like this, and we have an S&P that's down 15% on the year or something like that. And if you think about, peak to trough in 2008 into 2009, the stock market got cut in half. We go back to the .com. It got cut in half. This is the S&P 500. What are some of the similarities, and how far do you think this can go if we do have a protracted trade war?
Well, one of the things that reminds me is just that stress feeling of unease of, I don't know what's going on, right? And you'd have different policy announcements in 2008. You'd have different, programs from the Fed, and you'd try to, analyze it all at once, and all the stocks would go up or all the stocks would go down. It's just kind of like today. Like he said something, all the stocks went down, right? And usually, the best days are in the next week. You can figure out what stocks to buy. Let's figure out which stocks to short. And so that's that very macro market. They all gap up and gap down together based on headlines. Mm-hmm. And it's really hard for an investor to do that. One of the more bullish things that I think about here is that, we've had this glorious, easy run of markets for call it 15 years, since 2008, 2009. And the only place to be was the index, right? Nothing beat the S&P. I actually feel like this, and many people have called false breakouts of this, it might be the return of the active investor, the hedge fund out there who, hey, remember guys that are short stocks? Remember what it's like? Based on fundamentals, not a short report or anything like that. Based on, hey, Nike's in trouble, like Apple's in trouble. Like I think that this can trade on a lower number, a lower PE, and things are maybe more rational. That's not going to happen. We know that, but it's a beautiful mind thesis. Whether it works or not, I don't know. But I makes me feel good to say it.
I was about to say, so your bull case argument is that life's going to get exceedingly more difficult for the average investor?
Yes.
Okay.
Yep.
All right. I actually agree with them. Anyway, but I think in the here and now, right? So Carter Worth used that. I think that the problem is that we were probably headed into an economic slowdown already. Right. And now that he announced what he announced, it's going to be more severe and protracted. Right. Unless there's a complete 180 on policy, but it's really difficult to foresee that. And so you have to start thinking about okay, as Porter said, what stocks can I own? Certain stocks that are down a lot look cheap, but if I start putting it in a recessionary outcome where no one really cares how cheap something is, it just goes lower, you could probably wait longer on certain names. Other names where, you could actually maybe benefit from whatever it is we're expect to see. For example, 10-year yields better come down, right? Like if they do not come down, we have a problem. And we've talked about this
But if
before.
they come down, it's because of growth fears.
Yes.
Yeah. Okay.
But what are you talking about? What are you saying that these tariffs, if they don't undo some of these, this is not you can skate through this. These CEOs.
I didn't say we were going to.
Well, you made it sound like it's like a bump in the road. No, if you just said, let's assume that they stay in place. These things, if they stay in place, we're going way lower. It's not even.
Agreed.
But these are nonsensical. They don't make. So you now, as a CEO, are you going to make a plan, like a CapEx plan now, and reshore everything and go through this entire thing, knowing that it could be undone by the potentially next administration? No. You're not. You're not going to do it.
Okay, let's walk through this.
Go ahead.
Of Nike. So they walk in their staff meeting today. What do they do? Do they say, okay, we're going to reshore everything in the U.S.? Probably not. Do they make some fake announcements? Say they're going to, make
open a plant in the U.S.
They're going to study it.
They're going to study it. They're going to open a plant in the U.S. and then put a lot of money behind the Dems in the next election, so he's out and then life goes back to normal. Like, it's going to be a real problem. And do I think they walk it back? Probably. It's probably in some stage, but like not completely. And so I think that corporate profit margins are going down. I think that employment's probably going up. And
what do you mean employment's going up?
Unemployment.
Yeah.
Sorry.
Yeah, unemployment's going up.
Unemployment is
Yeah.
going up. And so I think it's problematic.
We just fixed the supply chain
We
issues.
didn't fix anything.
Well, the post-COVID supply chain issue, shortage of this, things got rectified. Finally, things are, I'm not saying humming along, but they figured things out. That in and of itself was a difficult task to reallocate. They moved some stuff around. Some was reshored as a result of it.
Some was nearshored. Now they got tariff.
Some was nearshore. But the point is that you just brought up a great point. So holistically looking at the market, right? Debt to GDP of the U.S., 130%, we're approaching, or 125. GDP is going to get hit on this. There's not enough offset at the government to make that ratio any better. It's worse, right? You probably bring back
inflation, though. That helps.
What's that?
Inflation helps, though.
Yeah, but my point is this. Like, this is a major shock to the system at the exact wrong time. We haven't had a real cycle. Remember, we were about to go in a real cycle right before COVID. We were going into it. I talk about this all. COVID hit, all hell broke loose, stimulate QE4. We haven't dealt with any unwind since we traded the great financial crisis together. And what happened then? We transferred the risk of corporate America to the federal balance sheet. We're trying to now fix the federal balance sheet, right? At the same point, we're now going to damage these corporations. That's the difference.
This is almost like a Brexit on a global
That's
scale.
a great way to. That's actually a great way to talk about it. Yeah, we just Brexited ourselves without a plan.
Yep.
That is actually
All right,
the best
so let me
way to
ask you guys
describe
this, though. Let's say we don't get big concessions from the ones that matter. And then we have to do bailouts again, like we had to do for the farmers back in 2018. We'll probably have to do it for the autos. At that point, then what does that mean? Like, what this is like it's like an own goal. It's like you're not going to fix anything. They're going to lose the midterms, right? They probably lose the White House in 2028, and then nothing happens. You know what I mean? Like, so it's like, why are we doing this? I've said this a couple times in the last day or so. It's like if they had used a scalpel, if they had gone after China first, like they did in 2018, and then start getting some of these unfair practices with your allies, your biggest trading partners, that might have been a pretty smart way to do it. And the other thing is in 2018, Gary Cohn came in. What do you want to do? You want to get tax cuts. And that gave the economy and the stock market a bit of a tailwind. So right now, it almost seems like they're literally trying to fuck things up on purpose.
Yes. Partially, yes.
You have to go with that philosophy or it doesn't make any sense at all.
But let me
well, and let's also keep in mind, whether I agree with them or not, it's not the point. Their view is that we have been wronged for the last 40 years and middle America got the shaft and he wants to alter the course. Now, we could yell at each other left and right, whether that's BS or whatever. That's what they're telling us. And, we should actually listen to what they're telling us because they haven't been wrong. I mean, he hasn't shied away from
in 40 years he hasn't. But Vinny, my question to you is that we know who made those decisions 40 years ago or 50 years ago. It was CEOs of U.S. companies.
Correct.
And to your point about Nike, 6.5% of their manufacturing is here in the U.S. So who are these punitive measures against? Are they versus our trading partners? Or are they versus U.S. companies here?
Well, I think some of it's probably against U.S. companies here, right? It's a bit of everything, right? Because it's Nike who made the decision to manufacture everything in Vietnam. And listen, would I chose to do things differently? Yes, but that's not where no one listens to us, right? And so, it's going to be a real issue because I just don't know. The uncertainty is going to be around for a long time.
75% of the economy, at least, is services. 25% is the goods. We're doing math on just the goods part. What's the services part? Right. Travel and leisure, right? Financial services is actually service. That's part of the service economy. So we're doing two things here. One is we're damaging or tearing the fabric of the U.S., in my opinion, as a trustworthy partner, period. So what does that mean to the service end of the sector of people choosing not to do business, not to go actually to do stuff with the United States of America? This has follow-on ramifications. So my concern isn't just the economic impact of what Nike needs to do. It's the overall attitude towards the United States as a partner, as a place of commerce. And that to me is the part, I can't price it in. I'm not going to go sell stocks on that, but that's what you have to start to think about. And the point about should Nike have made stuff in the U.S., should Apple make phones in the U.S., that would have been great. But you know what? There wouldn't be 300 million iPhones in the hands of people in the United States, and there wouldn't be Nike shoes everywhere. that were affordable. And so you can't have your cake and eat it too on both sides of the equation.
Totally
but you
agree.
can't just unwind the globalization, the markets, in a night on a poster board with a number. This is not a political statement. Scott Besson didn't even know the answer to the question of, does the additional China tariffs include the 20% that was already there? He says, I don't know. So who is not consulting with people that actually are supposed to make this is crazy? Chamath comes out. He goes, it's working 4%. Hey, Chamath, if you listen to this, which you probably don't, you probably don't. Are you looking at credit spreads? They are blowing out. This economy is a financialized economy. Oh, good luck with your auto finance. Good luck with with home finance. Good luck with securitizing anything because you just damaged it. Go ahead, Vinny.
Is it
Sorry.
Chamath or Kamath?
Chamath.
It's
Chamath.
Polyhapatia.
Chamath has already.
Did I say Chamath?
I know you did. You
Yeah.
did. Chamath has already sold his SPACs. So
Yeah,
he doesn't care.
Right. He's the one
Chamath-
advising. He's in the White House interviewing people. He's interviewing Howard Lutnick.
But-
I need to watch those two guys talk to each other.
But
Yeah.
listen to the way we're yelling at each other. Right?
No, it's just frustrating that-
the uncertainty out there is high, extremely high. It's really hard for anyone, for us, for corporations, for Nike, for Microsoft, for anyone to make decisions in a big, major way. So as a result, what does that mean to markets? I don't know. Bias down?
No one's hiring.
No one's hiring. Well, the government's no. Well, that's the beauty of the thing is the plug hole for all the jobs that we shipped overseas was the U.S. government, and now we're cutting those jobs as well. So in many respects, I don't know. This is a nasty brew. right?
Do we have a lot of sympathy for the fact that manufacturing jobs have been lost and
Yes,
towns
absolutely.
in Cleveland and whatever been hollowed out for years? Yes. Should we have a more of a turn towards that? I think so. But the problem is that, in a perfect world, we'd have no tariffs anywhere, right? Or some people protecting maybe the dairy industry or something like that. But, U.S. is uncompetitive. Like the wages are too high. Steve Jobs didn't decide to build his iPhone, in Cleveland. He went overseas because it was cheaper.
Yeah, but there's two other things. One other thing is really important, I think, that we're missing from that. They also wanted access to that market. There's 250 million iPhones here in America, or whatever the hell iOS devices. There's also 250 million iOS devices in China. So think about that. You know what I mean? And here's a company that has 90% of the gross margin for smartphones around the world, partially because they build the phones in China. They employ 1 million people through their, OEMs and fabs, building these sorts of things or whatever. So it's not so simple about the hollowing out of middle America because we couldn't have these companies. These are the biggest companies the world has ever seen, right? When you think about that. And so it doesn't happen if we're manufacturing them here in America.
No, it doesn't. No, it doesn't. But the other side would suggest maybe we shouldn't have had that.
Yeah, but think about 90% of the innovation in technology over the last 50 years also comes from here. And they're only able to fund that R&D and CapEx because they have that profitability, not just here because of cheap labor overseas, but they have access to all those markets overseas.
Well, the other thing going on right now is the wealth effect is going to go the other way. The wealth effect has been a huge boon for consumer spending, for the stock market, people investing. And I always underestimated that during when the market was rising the last few years, and it feeds on itself, right? We know that the top 10% control 90%, basically. And not everyone's involved in the stock market, obviously. But the fallout of this to me is that less spending. So it's going to feed on itself. Again, not trying to make a market call, but you got to be realistic if you're going to play this whole thing out. If you actually believe that the changes are going to come and maybe some will be permanent, I guess I'm just disappointed that, trust the process here. I don't think this thing was thought through. And to Porter's point, the Brexit, that I think is a great comparison, but Brexit was coming and then they voted it and it actually happened. And we were trading, 3 of us were trading during that. And yeah, we were caught a little bit off guard. This is even bigger to me, given that the consumer dominates the U.S. economy. And so it doesn't take much. We are already having a drop in consumer confidence. It was already happening. Now you're hearing Besant say, don't listen to what the CBO says. The CBO is the one that scores, tax proposals. And it goes, don't listen to it because they're not going to include all the gains that we're going to get from tariffs. So the next thing they do is probably shut down that organization. But anyway, so they're getting this tax package through. So they're obsessed on the minutia, to me, in the near term. Get this tax thing through. Really? You want to cut taxes into a slowing economy? So I don't know. Go ahead.
We're
Vinny.
also forgetting one other thing, which we will probably
Powell.
Well, no. Besson feels like Colin Powell, by the way.
I was going to say Powell, Jerome Powell.
No. Well, no, that's where I'm going, right? Which is, I think we underestimate how much debt was rolling over this year and how much lower interest costs were needed in order to roll over that debt. And
Federal debt, you're talking about at the federal level.
Sovereign debt.
It's like $8
US
trillion
debt,
or something like that this year.
And we were all trying to figure out how the fuck are they going to do this, right? And
I know, alienate all the buyers of our debt. Go ahead.
And they've chosen a path that I wouldn't have chosen. And because in many respects, it reminds me of two historic references that they're going for. The Reagan-Volcker of the early 80s and the recession/depression of the 1920s. They did the same thing, right? Jim Grant wrote a book on the 1920s recession, in case anyone wants to read it. And
early 20s, yeah.
And they basically sunk the economy quickly within 6 months, right? Now, I don't know if you could do it in this age of digitization and everything
and
else.
Globalization.
And globalization. Yeah. So I don't agree that they can do what they did in the 20s and also the era of information flow, but there is historic precedent of what they're trying to do. I just don't think it's going to work.
Yeah.
I mean, Luke Roman said, and he was right, he was hopeful that they'll fix the debt to GDP first before they start to enact any of these other policies. So it puts us on fragile footing. And so you're talking about, God forbid, on treasuries, getting them down to, because they have to issue. So you're alienating the buyers of our treasuries. Now, maybe they'll probably still buy them. Let's not be overly dramatic, but you're doing the biggest buyers, foreign buyers, right? So let's be clear. QE's coming back. 100%. Okay. So we are going to make up for whatever loss maybe from demand. They're going to keep rates down. And whatever happens to Jerome Powell here, I don't know, but his hand's now going to be forced. And the next meeting, I don't know what the odds are right now, Dan, of CME Fed Fund futures, of what the odds are for a rate cut. It's not going to do anything because...
But Danny, the problem is here for the market, right? That, there is no Fed put right now because they're still doing QT, right? So I think that the Fed put is a lot lower, right, in the market.
Stock market
wise. I think that Trump will cave if markets call it 10% probably. He'll cave to everything because, listen, this is a report card. He'll cave.
How do they do it gracefully?
It's un-American to short a stock.
Gracefully. By the way,
fake win.
Fake win.
Yeah.
He's changed the narrative of the tariffs, of why he's doing the tariffs like 6 times now. Someone put out something on that, but like every before it was fentanyl, now it's border. That it's all different things, right? And so, I just feel like the bottom's not here. Like just not. Like we were saying, okay, so maybe 250 in S&P earnings. Right,
which would be flat-ish year over year.
Yeah, and we solved for a technical level, but 19 and a quarter times is the 28 something. What was the Carter's level, right?
We were saying 4850 in the S&P, which was the 2021 high in the S&P 500.
Yep.
No one buys it when it gets to 4850 because it'll feel so bad. But the point is, right? But we're not here to be bears, I think, as much as it is.
I think, but if you think about it rationally, like people get upset if you're a bear. But like, I'm just trying to think about it rationally. Where would I, because I don't buy, S&P or whatever. Where would I actually feel comfortable buying the S&P? It's not there, but I'd put money to work there if things were okay-ish. Yeah.
And this market is so difficult to trade, and I would suggest to anyone, please don't try and do it, because we could wake up. I mean, I'm looking at each other, the 4 of us here, and if Guy was here, the 5 of us, it would be like the cover of an Economist magazine, right? And we don't say go.
Not a hunting magazine with a bear on it.
No, go long, right?
Okay.
And you could wake up tomorrow and some obscure news from China saying studying it and in touch with DC in terms of what to do. Could. I'm not saying it's going to happen. Don't yell at me, Danny. Could happen.
I want it to happen.
But by the way, that will happen.
Yes,
just whether it's a
will.
week from now, a month
Correct.
from now, it's going to happen.
And when that
they
happens,
can't stomach this, by the way.
No, of course.
The Germans can't stomach this.
No. And but they're going to anyway. Let's just say that happens, right? Market's up 3%, like that day. So it's really tough to press stuff like this. It's just tough to trade a bear market, and I would strongly suggest people, unless you're really good at it, it's really, really hard.
Does that headline, whenever it comes, does it turn the markets around meaningfully, because you're going to hear this, it's not a BT, buy the dip anymore. It's going to be sell the rips, right? And a lot of that's going to have to do with, you can say whatever you want about the concessions that we're going to get, whether there's teeth to them or not. Who knows, right? Turning this economy around once it's already weakened is going to be a really hard thing to do, especially if this has weakened our trading partners more than it has us in the meantime. So, for instance, if you get what you think is some sort of, intermediate term sort of deal that both sides can kind of feel okay about, what does the economy do? Because I know that's a tough one, but Porter, I'm just curious, based on what companies, the guidance that we get in a couple of weeks is going to be bad for a lot of these companies. So a lot of them are just going to pull it. Danny thinks there's going to be a
lot of Friday night dirties.
Yeah. But isn't the economy kind of sunk for the first half of the year and possibly a technical recession?
Yeah. I mean, just look at what Vinny said. The four of us can't agree on anything, where the markets are going. And these companies will have, to think that they have any vision in terms of what their sales are is you're kidding yourself. They have no idea how to forecast how is Carnival Cruise gonna forecast? Do people no, I'm staying home this year or whatever. I think it's just very, very difficult. I mean, look how quickly United Airlines, or is it Delta, or one of the airlines, changed on a dime.
Delta.
6 weeks. Delta.
Yeah. Right. In the middle of all of it.
Yeah.
Right. And listen, the banks, right, we're going to hear earnings from them first. And the one thing that's held up, and I pressed Vinny on this forever, and we're finally at the moment, we were in a moment already before tariffs, is credit. Consumer credit is deteriorating. Not crazy. I know, Vinny, I'm not going to go nuts. It's not horrible. But when you look at the signs of the FHA, right, which really cater to the lower income subprime homeowners, right, it's the metrics are horrid, and they have been. The auto delinquencies are growing. Subprime auto is really bad. I'm looking at three names today that I tend to track on my favorite screen, which is Affirm, Upstart, and Carvana. They are getting destroyed today. They're not. There's no. Hold on. There's no tariff issue with Affirm, as far as I can not taking this thing
one
through.
Can make an argument
that they should be the beneficiary.
Carvana is a beneficiary in terms of used car pricing.
But the reason is because I think credit and
they're wholesale financed.
Right. That's the other part with the credit spreads. That's the part. There's the hard part, as they say. And so I had always said, and you guys agreed, that Affirm and Upstart are financial companies, hiding as tech companies. And when it really matters, Upstart is still trading at 8 times book value for a financial company. They're only as good as the credit spreads. And that's it. And believe me, we saw what funding partners do to mortgage originators. We started watching it in 2005 and 2006. The plumbing started to change. They started to pull the credit lines and availability. Shrink, shrink, shrink. What's left when the tide goes out on your balance sheet? Remember, these companies sell the best assets and keep the worst and mark their books based on the selling of the best. That's how it works. It's always worked that way. And I'm getting pissed and I'm getting angry because people... investors, not institutional investors, they're big boys and big girls. I don't care about them. They've been doing it long enough. Let them go stock pick it. It's the retail investor that is now sitting there watching. I don't understand. There was 38 buy ratings with 0 sell ratings on this. I don't understand. They just guided up before. I don't understand. I thought it was a tech platform. I'm just saying in general. That's why I'm upset. Because you try to educate, and you're bearish, you're this, that, and the bearish. No, we're realists, is what we are. And now we're dealing with. Sorry.
That's my line.
Yeah.
Realist.
The Brexit one's the best line so far. But this is scary because it's real time. And the markets, you can't just shut the markets for a week and regroup. You can't just shut Nike for the week and regroup. You have orders that are coming in. Your imports are coming in. Right now, they're like, get it in here. Where is it? It's in the ocean. Land it. We got to get in here by midnight tomorrow, because if we don't get it at midnight tomorrow, it's going to, think how crazy this is. No time to plan. No time to do this stuff.
The good thing, Blackstone's marks won't change.
Oh, yeah. That's true.
If you're 100% in private equity, you're probably
Larry
up
Fink's letter.
What happened?
No more 60-40. Let's go 50-30-20. I have a great idea.
You're probably up 25 bips.
Yeah, you're right. You might be up today. That's the other thing. That is the other part.
What kind of track record do you guys think you have in instances like this where you're like, shit, we're a little too hyperbolic? You know what I'm saying? Like back in 2022, back in early 23 during the, the regional banking crisis. And I don't have the answer. I'm just saying, from a psychology
as we've gotten older, we've tried to get better and take less emotion in the topic, and then pivot when you need to pivot. And
you don't get stubborn, is what you're saying.
So of the last 5 years, I've sort of been in the muddle along camp, and I got lucky here and there. The budget, the deficit spent, and so they propped up the economy for longer. But I really think this, whether this goes through fully or half-baked or whatever thing, I think it's a game changer. I think it's a game changer for a lot of companies. I think the profit margins are going to get squeezed. I think it's going to, whatever this is, it's at the expense of the S&P, right? It's at the expense of a lot of the exporters, like the Germans. The Germans are in trouble. The state-owned enterprises, the exporters in China, they're going to get profit margins going to get squeezed. And so I think that there's a lot of people on this thing that are going to get squeezed. And so, I'm not super bear, but like I didn't buy a lot today.
All right, guys, let's drill down on some sectors. Danny, like you just mentioned financial services, what are some areas that you think are most squarely in the sights of a protracted bear market? Because one of the names you would have thought of that should be down 10, 15% today would be GM. Half the cars they sell here in the US come from outside. It's showing some good relative strength.
I just want to say one thing. Like, if you think about big money pools, whether you're like a, big Tiger Complex or Fidelity or Capri or even Klaus, the Europeans, right? They need sort of 10 years, 5 years of runway to say, I can invest in this as an investable theme. They need some sort of certainty. So until whatever Trump's doing with his tariffs and his, I might do this, I might do that, I might do this, we'll negotiate. Until you have some sort of clarity on any of this stuff, I think we're all just talking about jet wash, and where the market goes up and down, 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 up, 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 down, 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 down. They can't put money to work. They could be guessing and put money to work, but they can't put, I can buy a lot of Apple. But when Buffett goes, Buffett's a great example. Everyone's put the memes of him looking around with his cash. What's he going to buy? He's not going to make a decision until there's clarity. And so
or he creates clarity.
Yeah,
which he does.
But right, he can't invest. He doesn't know what's going on.
Consumer discretionary gets hit the hardest.
Yeah.
Period, I think. And let's keep in mind on the services side again, just to go back, post-COVID, we've seen a boom. It's been amazing. The U.S. consumer, never underestimate the resilience of the U.S. consumer. And so when I think about that, I think to Vinny's, the Visas and the MasterCards of the world, which have incredible business models, and they're fine. They're not going to go out of business, but they were trading at a very high multiple. Walmart was sitting at over 40 times. 40 times earnings. Carter said on a podcast the other day, Walmart's trading at one-time sales. They sell paper towels.
Wait, like pimp that out for a second.
Yeah.
So the three of you guys, you did a On the Tape podcast hosted by Danny Moses, Carter, Vinny, and Porter,
and bourbon,
and bourbon.
Lots of bourbon.
It was great. Go watch it on YouTube if you'd like, on the On the Tape feed, or listen to it, because I listened to it and then I went back and looked at some of the charts. You guys killed it. Carter was amazing. So
everything lined up too. I mean, it doesn't matter now, but he
one chart is some three donkeys. It was great.
Yeah, I know it was great, but you could see the writing on the wall. So now you're looking at.
Yeah,
that's a great title.
That wasn't the title. Yeah, it was bourbon and charts, I think, But honestly, like the setup now is, so let's say that we find out in October that we were in a recession in the first two quarters. Because for everyone out there, you know what a recession feels like, this is starting what it's going to feel like. This is kind of how it feels. I don't need the definition. I don't need to know whose organization's calling, because they'll also get fired and that will be shut down. And by the way, let me give another flavor. Let's say that Moody's or S&P or Fitch decided to try for 1 second. The irony in this is they waited too long to downgrade the mortgage companies, all AAA. Imagine they even hint at coming after the U.S. credit rating. Imagine what'll happen. Bye. Shut them down. Shut them down. That'll be this is not hyperbolic. These are things that are happening. So I am so disappointed and upset about everything that's going on, right? Because when you invest and just being a consumer, you want to believe that there's laws that protect you as a consumer. There's laws that protect you as an investor. And I think we've seen a market change in that, in my opinion, what's going on right now. And so there's no CFPB, guys. Call it what you want. I know they overstepped their bounds, Consumer Financial Protection Bureau, but guess what? Credit's going bad now, and who's looking out for the little guy that we talk about that they're supposed to be championing and helping out? It's not going to be pretty. So, I'm getting all wound up here as we talk about it. You make me say to myself, where would I put my money right now? You know what acts bad and great today at the same time is gold. Gold is down. Yeah, it's down $40. It was down 100. It came snap right back. Gold has been the one constant throughout all of this, continues to be gold. But now you can see why. It's not inflation.
You didn't do the baseball,
It's
right?
not baseball.
You said one constant.
One constant throughout time has been gold. But honestly, so where am I putting my money right now?
I didn't
Gold
ask you
seems
where
like-
you're putting your money.
You
I
said,
what are the names that are most in the sights of a protracted trade war?
well,
that was the
who
question.
benefits from am I saying allocation? It's not realistic to say people are going to go buy gold. So it's not an allocation.
Yeah.
So let me try to be slightly bullish on a sector, and maybe
My bullishness earlier?
no. Well, yes, it's exactly like your bullishness and Daniel. Well, spreads, just rates have to come down, right? They have to. I'll say it again and again and again. If rates don't come down, if they start going up with all these issues, we're going a lot lower than 48.50, like a lot lower. But I'm under the assumption that rates will come down. I don't know where. Call it 350 on the 10-year, 375, something of that ilk. And 3-4 months from now, we'll start a cutting process that'll bring Fed funds down to 2 or 3, right? Because we are in a recession, right? That's what's supposed to happen. I think you can own some of the mortgage names, right? So on the charting there was a recent acquisition. I spoke about it before of Rocket Mortgage bought Mr. Cooper.
Just like gold's a great name for a great ticker. for
Bear
a
Gold,
company.
Rocket.
Rocket is a great name for
Yeah.
you know.
But you think there's movement in the housing market if we're in a recession, if people are losing their jobs, if the economy
Two types of mortgage originations. Yeah. There's purchase and there's refi, right? I'm banking a little bit more on the refi, right, than I am on the purchase. And if we get rates low enough, there will be a little bit of movement on the purchase. I'm not saying it's crazy. I agree. I'm with Ivy. Don't go out and buy the home builders. I'm just simply saying, and mortgage spreads tend to widen out, and gain on sale spreads tend to widen out, which is good for these companies. And
That is not a bullish pitch. I know it's a bullish pitch, but it's not a
it's
bullish
not a bullish pitch.
No.
That's why I think Danny's not yelling.
Yeah.
Well, there's nuggets you can own. Those companies aren't big enough that. So let's pretend you're the portfolio manager today at Fidelity, and you have to
Rocket's
allocate.
a $30 billion.
Okay, so when the deal closes, it'll be it's big.
It's big.
So so Rocket's big now. I didn't realize that's the combined valuation of what it's
No,
going to.
That's the Rocket.
That's just
So
Rocket.
it's going to be even bigger probably when
Correct.
they. Okay.
And I also think
Mr. Cooper is like a like.
All right. So it's one name. Well, how much can you own? But my point is
I
this:
agree.
it's a small part of what? No.
I gave you a name.
So you're a portfolio manager at Fidelity, and right now you're getting your analyst done. You're reallocating, and right, you have to be invested. What sectors, if your benchmark is the S&P 500, are you now overweighting, and what sectors are you
They are
underweighting?
plowing right now, hand over fist, into Coca-Cola, Procter & Gamble,
McDonald's.
McDonald's,
The same shit as they always
Netflix.
do.
That's the blueprint. That's where they're going.
It's not yelling. They're buying Philip Morris right now.
They're
so,
buying,
yeah.
yes, they're buying Philip Morris. They're buying the staples. But when you idiots like us, when we look at that multiple and we're like, fuck, I ain't buying Coke at 25.
By one of the biggest downwards earning revision, and Dan just shared Butter's facts that the third largest earnings revision lower in Q1 was Staples. Like they're already. I hear what you're saying. I'm not saying you can't run and hide in them for a period of time, but it's kind of interesting.
I want to go to one thing that you just said, Vinny, and maybe Porter, you can hit this. So you said rates have to come down, maybe 3.5. Okay, so back in September, the 10-year yield was at 3.6%. You know where the S&P was? Right here, at the same level, right? So if the economy is weakening now back then we were worried about the jobs market, right? That was one of the reasons why they did that 50 basis point cut. So if we have earnings that are now going to be flat year over year, let's just say, Porter, you started out by saying that, right?
Yeah.
Back then,
By the way, I'm saying me saying the S&P earnings are going to be up a little bit this year. That doesn't sound like I'm bearish, but the analyst expectations are what are they, 13% earnings?
They were.
They have to come down.
This is ridiculous.
That was before this also.
It's like the Tesla earnings. They're expecting 13%.
Every
earnings growth.
strategist
It's
at the
oh
end
my
of
God.
2024 had an up. The 19 largest strategists had an up target on the S&P. I get it. I know how it works. It's normal, right? So what we've seen since then is coming down. Gold analysts going up. It's just chasing the current.
But Porter,
the question
give
is
me that on that, because okay, let's just say to Vinny's point, let's say we have 50 basis points lower in the 10-year. Maybe that happens sooner than later, especially if this looks like it's not going to move, like the tariff situation. You have an S&P right now that it's basically 5,400. That's where it was in September. Let's say we start seeing cuts to those S&P earnings. The S&P could be easily at 5,200 and then on its way to that 4,850.
Well, so like if you think about, I actually think that at some point you're going to want to buy the banks back again. I mean, the Bank of America's gotten killed at something like 10 times earnings. It's not as expensive as it used to be, but if rates come down, it's a positive for their bond portfolios. They sold all their mortgage stuff, but then some of that activity will pick up.
But we're far away from those.
We're far away. I agree.
No, not regionals.
Yeah.
More credit exposed.
Yeah, its problem is like lower. Like I said, like lower, but they're not exposed to the trade war. Your brain doesn't have to wrap its head around, Nike and stuff.
Well, they are exposed to the trade war because they lend to the companies that in middle America that make goods overseas and manufacture. So I hear what you're saying.
They do mostly domestic lending, though. So and theoretically, if they're going to build plants here, maybe loan growth.
Yeah, no, I'm not. I'm just saying everyone's impact. You can't get away from it. It's very difficult.
I'm trying to be bullish here, so yeah.
Yeah, no, I love it. It's great.
Besides the S&P gold sector, which
Danny
is one
asked,
stock.
what is Fidelity buying? And everything we mentioned, no, they're not buying that. No, they're not buying that. Like, all right, Danny, what are they doing?
Yeah, I know.
What are they buying?
They're going to go back to the Mag 7 at some point.
All right. So we just went 45 minutes without talking about the Mag 7. Okay. So these are some of the hardest hit stocks in the entire market, from Apple, down 21% to Tesla down 50%. In between, Meta, which was a darling just a few weeks ago, right, is down like 27, 28% or so. We hear this all the time about leadership. And how they perform during, a drawdown like this. They're the worst performing names. So give me a sense of will this leadership, when they bottom out, does the market bottom out?
Well, maybe these stocks will start to bifurcate themselves, because Meta is a lot different than Tesla, than Apple, and than Netflix, right? And so we're talking about Spotify. Spotify is not down that much today, right? Mm-hmm. So that was sort of a non-tariffed, hit company. Maybe Meta's a little bit that way too, right? Maybe that they decide, I'm not going to spend, 80 trillion on data centers, and my cash flow is going to go through the roof now, right? Because the earnings aren't going to get killed. And so I can wrap my head around something like that, where it's not good for NVIDIA, of course, but maybe, Microsoft is...
All right, this is a great point about Meta. Okay, in 2022, the stock was down 70% from its all-time highs. It didn't bottom until they started rationalizing costs, until they started firing people. You know what that is today in this environment? It's cutting your data center, exposure.
And back then it was the metaverse, and I think the consensus was, and rightfully so, that CapEx spending was stupid. Yeah. And we've all decided that CapEx spending in AI is not stupid. So therefore, they were getting the benefit of the doubt. The market.
Yeah. Right.
But with DeepSeek, and if there's an easier solution, it should be net beneficial to them, I guess, at some point.
So you don't want to buy the data centers. You don't want to buy, NVIDIA, but you can buy, Meta, Microsoft.
All right, so
Google again.
Well, you can't. You can and you can't. So you talk about the S&P 500.
We're trying to be bullish here, Danny.
No. Well, I just wanted to say on a proportional basis, if money comes out of the SPY, those are going to get proportional.
No, I agree.
So what I'm saying is, if you have the it's not time. It's not time.
While they may not be subject to the trade war, they're certainly subject to a weakening economy.
Oh no, I think some of them are subject to the trade war.
Advertising, they make a ton of money.
The advertising, but that's not tariff. What I'm saying is the weakening economy.
Yeah, but who's spending? Same thing in regional banks. They lend to companies that do business. They get advertising spend from companies that do business.
And let's not forget, all those companies have a decent portion of their revenue streams are from overseas, right? So that is going to be an issue.
What about the weak dollar? Is that something? You know what I mean?
I'm more worried about do they slap tariffs on software services, right? Yeah. Because that is a trade or services surplus for us. Is that one of the ways they combat this? Does China say, "Good luck selling to Tesla. Good luck selling a car manufactured in China to Europe without us slapping an additional tax on it."
But Google's CapEx per quarter, it went from 14 to 20, something like that.
Big number. I forget what exactly.
Maybe it goes back to 10. That's a lot of cash flow.
It's funny, we've had so many guests on Fast Money over the last 6 months.
No one are bearish on.
Guy and I have been pounding these folks. What is this sanctity with this CapEx number. You know what I mean? That's been skipping higher and higher. And it's actually obviously been decelerating pretty meaningfully. Guys, we only have a few more minutes. I just want to kind of go back to, 45 minutes ago when we started this, the S&P was down 4%. Now it's down 4.75%. Okay. So it's going to close on the lows with 5 minutes left. Okay. We have a NASDAQ that's down nearly 6%. So by the time folks are listening to this, all right, it's going to be tomorrow morning at 8:30. We have the all-important March jobs number.
Beeks. Where's Beeks?
Well, is that important? And what are we expecting? Let's assume there's no data tomorrow or no messaging on the tariff thing. And let's say we have, what is the jobs number?
What do you want? Well, if you're a bullish, what do you want?
You mean if you want an excuse to buy stocks?
You want a weak number?
No, you don't.
You want a weak number.
Yeah, I don't. I disagree.
So
no.
I
You want a
disagree.
weak number. You need the Fed. You need someone, Superman.
We had a weak number today on jobless claims. How'd that work out?
Didn't matter. Like that was
I
the
thought it was a
relevant.
good number on claim.
I don't think so. 200-something thousand government workers. So the government stuff's now feeding itself into private payrolls versus the overall payrolls. Right?
Listen, I think the market wants a weak number. That's my opinion.
Let me say something, and I don't have. I actually don't know the answer to this. Tariffs are inflationary. I don't know that to be the case.
I agree.
Oh, it is. I think it is.
No, but hold on.
I'm with you, Dan.
If they actually, but I think it's deflationary if it scares people into not doing things, meaning consumers pull back. So you're assuming tariffs are inflationary. I'm not saying that they're not. I'm saying if the pass-through works and then the consumer still buys it, that's inflationary. But I don't think it's possible. So the trade-off would be earnings are coming down a lot if the consumer's not going to eat all of it. So pick your poison. So that part I don't know, and I honestly don't know the answer because we're in a kind of uncharted territory here of what that looks like.
It's a real issue. You want to go furnish your home these days, you're going to get killed.
Well, you're not going to do it.
You're not going to do it.
That's my point. So it's not inflationary because
Clearly you're not doing it at Restoration Hardware.
No,
They've had a rough day.
exactly.
By the way, that call last night, he was on live when the tariffs came out. It's epic. He was on live. He go, holy shit.
It's down 40% on the day today.
I think it was worse. At one point.
Yeah, it was. It was trading 140.
So much your honesty that gets you, see what it does? Get you crushed by CEOs.
so-
We're short the Wayfair. That's been a good one.
Let's say the jobs is, it just doesn't matter, okay, one way or another.
It just doesn't matter. We're in stripes now.
Yeah.
It just doesn't matter. I think the unemployment percentage is a bigger issue than the jobs number, in my opinion.
Same
The
thing.
actual, well, it is and it isn't.
But I
Because
don't think tomorrow's number really matters. All that much.
That's what I was trying
Not
to
in a
get
market
at.
like this.
And let's assume that there's no
It's a lagging database.
And so let's just say tomorrow everyone takes a breath. We have a market that's up 1% after the S&P closing down 5%. Do you go out long into the weekend?
Oh,
No, I don't think so. Listen, so what are the things that Vinny talked about that, you have to start to plan for? We've been programmed to buy the dip. The world has since 2008 because the government has your back. They can do something, new acronym, something will happen. So what's on the table that can make a market rally? I think they're just small wins. I just don't see a sustained reason. So I think it's a sell. Fed might cut rally. What is it really going to do? Nothing. Tax cut bill advancing. Okay. Not is it going to do anything? Not today. It's not. So all these things that they can pull from the
All right,
from the belt.
surprise cut. Does that freak the market out? A surprise rate cut?
yes.
I'd be surprised.
It won't be under Jerome
No,
Powell.
let's just say for whatever reason it happened. Okay. Does that freak the market out?
I think it initially goes up and then they freak out. Yeah.
Howard Lutnick and Kevin Hassett being fired, rally the market.
I remember where I was in 2008 when they did the surprise cut. Oof. Crazy
Yeah, no,
times.
it's listen.
like again, those are the
Nothing
big
is off the
uncertain
table. You have to
times.
think the craziness that's going on. I joked before about. I think we were a day away from a short ban in Tesla. I really believe that.
Could I give some good news? Just
Please.
for now, right? Right now, we haven't seen anything systemic start to come up.
What do you mean?
It's been 24 hours.
No, but the markets have not. I agree. But
I'm watching credit spreads. I think that's systemic.
I agree. But there's been no bank like you're not hearing a bank going under. You're not hearing a not yet.
24 hours.
I'm just
Shomer
saying.
Shabbos.
Jesus.
Yeah, I mean,
Liberation Day.
seriously.
Jesus.
Yeah,
Don't.
yeah. Please. Listen,
Happy
this is
own the lib day. All right, we got to do Tesla really quickly. So on the 2nd, which was yesterday, by the time you're listening, it was 2 days ago. It was absolute bloodbath as far as deliveries. We can all agree on that. I think even the most bullish folks can agree on that. It came
crazy
in at
number.
336 deliveries. I think 3 months ago, the consensus was like 430 or something like that. Margins are going to be horrible. They've been buying down rates. Demand is horrible here in the U.S. It's horrible everywhere they sell cars. Vinny, give it to me.
absolutely nobody does it better than him.
No,
And
I agree.
Nobody does it better.
Nobody
does it better.
No one does the spin better than him. I mean, here we are. Again, I call it's a fundamental analyst's worst nightmare. Here we are. We had a certain delivery number. It was worse than we did. And I was trying to move it up a little bit, saying he's going to cheat, he's going to cheat, he's going to cheat. He didn't cheat. But then he spun narrative that he's going to take his Doge cape off because he's got to go home to Austin, right, to save the company, right? So the sad part is this
Stock finished up like 10% that day. It's nuts.
Amazing job. The sad part is that I don't think we're going to get what we think we should get in this name until we start to see robo-taxis and Optimus Prime, right, delayed. And
what's going to happen? You know, they have an event, a robo-taxi event in Austin in June. Do you remember last year they had an event in July?
One? Yeah, the fake one in the Hollywood Studios.
But they pushed it out to October, right? And so in this last quarter, and I'd love to get Porter and Danny, they basically, Elon said this. He's like, don't look here at the auto business, to your point.
These aren't the droids you're looking for.
He said, look at FSD, robo-taxi, and Optimus. And, if you don't believe in that, you should not be long this stock. Let's be very clear.
Do you think you want a 120-pound robot? Like you can't.
What do you mean? He said every human on Earth would have one.
120 pounds. What does it do for you?
Right.
What are you going to? I mean,
listen.
What's it going to do? Cook for you? I mean, like.
I'm going to tell you the only way to it's been brain damage to try to short the stock, time it, this, that, and the other. And I think a lot of people, a lot of scar tissue there to go try to do it, which is why the stock is actually holding up. And I'm not joking about the short band that I think was about to happen when it was at 215 or 220. You want to go try to short the stock? Go buy puts out, okay, 6 months. This is not financial advice. At $100 strike. Forget it. Because if it goes to one, it doesn't trade anywhere near fundamentals. So if it begins to trade on fundamentals, I'm not saying that's going to get there. I'm saying that is the risk reward trade to try to.
Let's play a game here. Imagine Guy comes in and gives us all 4 Optimus robots.
Okay.
What
does that even mean?
What are you gonna do? What are you gonna do with the Optimus robot in your house?
Like Rocky in Rocky 4? Paulie's robot?
What are we gonna do? I'm gonna chop his arm off and call it Garrett Cole.
Yeah, exactly. Oh, you're gonna hurt his arm and call it Garrett Cole, exactly. I don't know. This whole thing is
it's like what are we gonna do with the freaking?
So let's be clear. Let me close the door on this. Sure. Tesla said when he goes back to Austin or wherever he goes back, he's done a Karate Kid sweep the leg through Washington on every agency that has been investigating him.
So full self-driving is going to have a clear slate.
My point is that people like us that believed in securities laws believes that he would be forced to pay the piper for the stuff that he's done. No, he's not. No, it's gone. So that part of the story is gone. And so came through Washington. Now he's in the SEC. God knows what documents that he's drubbing up with his guys right now in the SEC. Then he goes back. So he's in that way. You can't rely on an enforcement of any. And that's always a dangerous. But people out there, I wouldn't be long it. Forget about being short it. There's better names to own. Bank of America is a great idea if it gets hit enough. Something like that, I think, is a nice liquid way to play it. So
you pitching Bank America is just
well, I remember when we were buying it, the most liquid thing on planet Earth, and it was when we were at Seawolf. It was the next iteration of when things got hit.
During the servicer issue, the putbacks. Remember the putback issue? Yeah.
No, and listen, large liquid name was trading under book value. So anyway.
Just to be clear, so if you're looking at Tesla close today at 267.
Higher than the delivery day, which is. Yeah.
So it's down 5.5%. If you looked at the at-the-money straddle in October, okay, that's the put premium plus the call premium, it's about $100. So think about that. It's basically saying $100 in either way. So it could be
maybe we can tariff that.
367.
Maybe we'll do the math and tariff that.
167 to the downside. Seems reasonable, but you never buy that. You get destroyed.
Well,
all right, gents. A lot of good stuff here. We're all in studio. We all miss Guy Adami. I think that there's going to be some Yankee Mets talk here. You didn't get to it. If you want it, Guy probably will listen to this one. Do you have any parting words about the Yankees here?
I told him he's going to get us an Optimus robot. Chop the arm off and call it Garrett Cole.
What the hell are we going to do with these Optimus robots? What are people going to do?
By the way,
their drinks.
Usually on days like this, we get a call, the Fast Money guys, because we're done at 6 o'clock. Kramer goes on at 6 to 7, and usually we get a call. Can you guys stick around for a markets in turmoil sort of episode? We didn't get the call, so maybe that's a really bad thing because usually when they do those shows, it marks the bottom. Yeah, you guys know that. All right, Vinny, Porter, Danny.
All good,
Great
man.
pod.
Happy Liberation
This
Day,
was
guys.
really
I'm
fun.
feeling liberated.
Oh my God. All right.
Day
On
one
that
after
note,
Liberation
We'll see y'all
Day.
later. Thanks so
All right.
much. All right. Bye.